So, how do I pay less interest on my mortgage?
So at the moment, the way we are getting funding for our home loans and mortgages, we are getting funding, we are getting the loans from these banks, yeah? Banks or lenders. But in turn, they are getting their funding from external sources, yeah? So they might be investors, they might be larger investment banks or international funding as a whole. Those sources are the ones who set different conditions on how their money should be lent. With the current conditions that we have with banks in Australia, they have set different interest rates for principal and interest versus interest only versus investment loans for investment properties, for owner occupied properties, for properties where the loan is less than 80%, where the mortgage is less than 70%, where the mortgage is greater than 90%. Yeah. So let's say it's your money, yeah, and I'm the bank, and I'm the one who lends it to customers. You are giving me your money with a condition. If you're going to lend my money, and if you give it to a owner occupier, someone who is living in their own home, and they are only borrowing 70% or less, and they pay principal and interest, I don't mind if you give me a 5% return. I don't mind, because my money is very safe. Owner occupiers in Australia rarely default. If they are under 70%, my money is secure. I can get it for, by selling the property. And if they are paying principal and interest, the mortgage is going down. So I don't mind if you pay me 5% as the return. But if you are giving my money, or I'm giving your money, were you the lender or was I the lender? You were the lender, okay. So you tell me that if you are banker, if you are going to give my money to someone who is going to put only 10% deposit, is going to buy an investment property for it, and only going to return interest on it and not principal, I want at least a 7% return, because it's very, very risky. So, how to pay lower interest rate? Firstly, try to become a low risk borrower. Yeah? Make 30% deposit, make it for owner occupier, and pay principal and interest. Again, at the outset, I would rather pay higher interest, being the riskiest borrower, paying only 10% deposit, pay investment on interest only. Yeah, that's what I prefer. But there is a whole different world and explanation to it. Anyone wants it, contact me and we'll have a one-on-one session. But as general advice, it doesn't apply to anyone. I would say if you want to pay lower interest, become the least riskiest borrower by keeping your LVR low, making it owner occupied, and making it principal and interest. The second thing is, not all banks are the same at the moment in the current funding environment. For the same kind of risk appetite, which is principal and interest, owner occupied at 70%, the highest interest rate some clients might pay is up to 6.8%. And the lowest interest rate that someone might pay, So the highest at the moment is probably 6.8%. The lowest at the moment is probably 5.2%. So that's the gap. It's 1.6% gap. Yeah, at the moment, which is huge. Yeah, 1.6% on $1 million mortgage is about $16,000 a year. Yeah, and that is after tax. So all these things that we talk about interest repayments is after tax. So even at a base rate of tax that you pay, so you earn about $24,000, pay tax on it, $16,000 you get take home, and that is the difference between paying the lowest and the highest. So there is a differential between different banks at the moment. So what I would suggest is, if you want to pay the lowest interest rate, come in the lowest ranking risk profile, and make sure that you shop around and get the right bank which is giving the lowest interest rate and switch to them. At the moment, that by law, a bank cannot ask you for exit fees. Bank cannot charge you any heavy penalties for leaving the bank and all those. So it's written in law by now. So it's legislation. So that way, there's no problems in refinancing, and it's hardly a hassle these days. Right? Cool.